Hello guys, hello, what's up? Welcome to another day, another analysis here at our YouTube channel. So first of all, this will be our last video this year. We'll be posting because from next week we won't be posting much. We'll take the Christmas break off first and New Year's break off as well, and then we'll be back later on next year, early next year. You'll see us back with a bang, and we'll be taking off from the markets, taking on Kenya. And moving on to newer heights. So I hope you enjoyed the analysis, and yeah. So good morning everyone. Hope everyone is well. Welcome to today's midweek analysis. So I hope you're having a wonderful time enjoying the Christmas so far. Today I believe is the 16th, so halfway into December. 15 more days for 2020 to end. Hopefully with all of the negative things that have been happening as well. And apart from that, the markets are the markets. No matter where you are, where you're from, the markets, the same charts you're seeing in America, Kenya, UK is the same charts I'm seeing here. So with that said, on Monday we covered a few analysis. I remember I was talking about a short position I was on Monday on Aussie dollar, which I came out. So markets have really been moving sideways. They're not really gaining direction, which we'll look at them practically over here, see what is currently forming. But I came out of that trade. It's a trade I took last week after the Zoom session. If you remember, when we had the Zoom session, it's a trade I had. I still had it running on Monday, and then market hasn't moved much. We're still not seeing that correction on the dollar, and dollar still has a lot of free fall. I'm still seeing dollar continuing to drop. It's just that we're not getting those good entries. Market is just consolidating and continuing in the trend direction. For those people who trade GU has been crazy as well. We're expecting a drop, at least the gap to close that opened on Monday, but that didn't happen. Yesterday we saw a crazy rally on it. Sort of, I think on Monday we sort of saw the market sort of going for that close, then bam, suddenly it went back up. And then what else? Gold. I was expecting a drop on gold, but gold has also been rising, which we'll take a look at. And apart from that, everything else is fine. These are the markets. We're used to trading the markets like this, so nothing really out of the norm. Out of the norm things is when we see things like oil. Oil opens up sometimes with 800 pip gap, such stuff. So, or when it crashed all the way to zero, such stuff are what are not normal. But markets moving in a certain direction that we're not expecting, that's totally normal in the markets. So we just book our losses, or we take our break evens, or if we get profit, because sometimes when the market is really choppy, it's good to enter the market with, you're not aiming for really a lot of pips, so you can easily come in out, in out. For example, we look at gold. It was sort of ranging in a market, which if you entered in out, you'd have made some money. So, but with that said, we covered a few on Monday. We covered a few technicals. I mean fundamentals that were to come out this week. As I said, make sure if you're trading the pound pairs, you're paying attention to Brexit talks. That's what's the narrative of the market. And moving forward, we'll just look at the technical analysis. What we are looking at. I look at a few pairs. Ken is not in today, so I look at the pairs for you. I look at gold as well, and then a certain perspective I look at on oil as well, because I think Ken covered that on Monday, and I should follow it up because I had a certain perspective he was also watching, so I'll sure to cover that. But mainly off, I'll start off with the dollar index. Yeah. So if we go straight into the chart analysis, I hope you can all hear me. If you have any questions, please ask in the chat room, and also ask on Friday, because this week I think we'll be ending our analysis until next year, so we won't really be doing live sessions anymore till next year as we take the Christmas break off. So if you have any questions, please ask me. If you're looking still for funding program is still running, so if you have any questions, ask in the chat room, please. So just a sec as I okay, cool. So starting off, quick look at the DXY. So for those who are new, we look at DXY just to know the relative strength of the dollar. And what you're currently seeing is a crazy downfall that we've been having ever since around March. March, April market has been falling. So the narrative of the year, most of the year, apart from the first quarter, we had a bullish run. The rest of the year, the rest 3 quarters, market has been really falling. Lower lows, lower highs. We can see yesterday, the past few days, because it's the daily chart. Market sort of entered this consolidation. 4-hour chart much more clear. So I sort of had this trend line. If you remember on Monday, I was saying I was looking for a short position around here. That is where I was short on Aussie dollar, because I was expecting after this touch, you can see this first touch, second touch. I was expecting market to come in touch here, because you can see first touch, second touch. I was expecting a third bounce of the trend line, which market didn't do that. That's why I am not normally heavy on trading corrections, because corrections can form in different ways, unlike impulse waves. Impulse waves are meant to move in one direction, but corrections can form as a sideways, like this one for example. It can be a triangle, it can be a wedge, it can be a flag, it can be a head and shoulder, whatever correction you normally trade. So that's why I don't really heavy on them. But if you look at this impulse, okay, impulse happen in one direction. If the trend is down, they'll just go down. If the trend is up, they'll just move up. And like sideways movement, because for example, look at this sideways movement here. Market was a steep correction back up, then went down. This one over here, we had a sideways movement, and we're seeing market continuing to fall down. So I had sort of this sideways pattern, consolidation pattern. Market sort of starting to break out below this level. And if you look at the daily chart, you can see there's a lot of potential to the downside on this one. So you can see market still has a lot of room to the downside, at least targeting around 90 level. Currently we're at 90, so we can still fall all the way to 89 level. So with that said, looking at my other pairs, what am I seeing? Aussie dollar. Aussie dollar, if you remember weekly chart, I've been saying I'm bullish on that one. However, I've been looking for those pullbacks so that I can get an entry as well. But market past few weeks, bullish run. I still expect market to run at least all the way up to this trend line level, which is around the 0.780 level. So I think that's about 250 pips from where we currently are. So I'm still expecting that run to come. Looking at the daily chart, you can see also it's in line with that. There's still a lot of potential on this one. Look at this pattern. So we have this sort of trend line, sort of a wedge-like pattern, and you can see Fibonacci. We came to touch 27.2. So if you use Fibonacci levels, you normally take this as target levels. So I was expecting at least a correction from here, but ultimately the target where we can get a deep correction is up here in line with 161.8, in line with this upper boundary of this sort of like wedge-like pattern. So that's what I was aiming at, but I was aiming to get a correction at least on the 4-hour chart, at least back to this level. I had this level I was watching. So I was watching around this level, the previous high. So you can see market has been going higher, low, higher, low, higher. I was expecting at least a touch of this before we continue going up. But now if you go to the 1-hour chart, you can get to see there's a certain consolidation that's happening. Okay, so I'm not sure if most of you have seen such a pattern, but such patterns occur. They're just like diagonal, converging triangles. It's just that it's the opposite of it. These are diverging triangles that they move outwards instead of inwards. Okay, so you can see this touch, second touch, third touch, fourth touch. Market can still come back to this level if the short narrative is still there. You can see that touch up there before market comes back down and moves to those targets lower. So that's what I'll still be watching on this one. Unless market momentum continues up higher, I'll be staying out of this one. But I still expect a correction. If market is able to come back down, at least correct lower, we can start getting those entries to continue pushing this market up. Because long term, I'm still very long on this one, but short term, expect a correction to come in. With that said, looking at gold, well, I've not covered gold in a while because Ken is one who covers it, but using my analysis, because I do not use Elliott waves, so in the daily chart. So personally, I trade patterns. So what I was basically watching on this one, long term, I remember I shared last week on the group, I was saying I was very bullish on this one, and they expect market to continue to new highs going into 2021. And I remember I said my target because I was using, because this impulse, okay, so watching this impulse correction and an impulse. So what, when you normally have a channel, the impulse waves are normally of same length. So if you use that as a target, okay, using your bars too, using this same pattern, bring it here and you put it there where the market started, you can see this is a perfect touch of here. And I remember I said on the group I was aiming for 2350 long term. So that's the level I'm watching, 2350, in line with this sort of like channel pattern, okay. So that's what I'm watching on this one, long term. That's into next year, looking into maybe the first half of the year, or depending on how long it will take. That's what I'm watching. It can also take a whole year, but that's what I'm watching on this one, especially if this correction is done, okay. So if this correction is done, if I show you on the 1 week chart, this level, okay, so what I was watching here, so you can see, if I zoom out, you can see this support, I mean resistance level now acting as support. So back then market was respecting this level. So those are levels I'm watching long term. So you can see this rejection of this level once market came into new highs. So we really rejected this level before market had this crazy drop. And right now when market came to retest it, you can see we had this very strong bullish close. Market didn't correct, and then we got this final correction. Then market was able to touch that level, and then we continue moving up. So coming down to the daily chart, we enter that correction within this pattern. So you can see this first touch, second touch, and third touch. I expect this market to continue moving up, okay. So I'm still waiting for a good correction. You can see I've written a massive rejection of 1855. So why did I say that? Because this was the level that was acting as support before we broke. So you can see this is this support acted as support, then you had that strong break, market broke above. So I'm watching this level. When we break above this level, which is the 1855 level, then we'll be very into the bullish territory of this one. And finally, if we get a break of this line, okay, then we'll be very bullish on this pair to continue moving further up. But down here I was expecting, if you go to the 4-hour chart, we sort of had a this is why I don't trade, what is it called, head and shoulder formation. So let me show you on the 1-hour chart. I did some back testing back then on this one. I found it not to be reliable, okay. So you can see this basic pattern, sort of, this was sort of like the shoulder, this was the head. I was expecting a shoulder here. I was expecting this market to drop at least to the Fibonacci level 61.8 or 78.6. but what did we get? We got a massive rejection from this support level, which is around the 1825 level, and market has gone back up, moving more than 300 pips from where we bottomed from this level. So I'm never really heavy. You won't find me telling you I've taken a trade on a head and shoulder pattern. I don't. They do happen, I don't say they never happen, but I don't, they're not reliable patterns for me. If you've had a similar if you've had a similar history with it, maybe you already know. If you don't, I can tell you here and for sure, some people trade it. I don't see it. It works sometimes, but most of the time it's not a reliable pattern, because remember, when you're drawing your patterns, they're very subjective. So I normally like looking for patterns which everyone can see. For example, this pattern over here, okay. So someone is asking, what patterns do I really rely on? I rely on mainly a lot of wedges. So for example, this is a wedge, okay. So if you look at this wedge, market came from this level, we broke this level, then market entered into a consolidation level. So this was around the 1850 level, which is a key level. So once market breaks a key level and then starts entering sort of like a wedge like pattern or a flag such pattern, it's likely to see the market falling, and that's what we got over here. If I show you another pragmatic example of that, we had a few weeks ago. It was the trade we took over here, same thing, exact same thing. Market came with a lot of momentum, broke this key level. This was the 1830 level. Then market sort of entered a wedge like pattern, and look at that drop that came. Same thing with this one, look at that strong drop that came. So personally, I only trade 4 patterns. So for the person who's asking, I trade 4 patterns. That's wedge, flags, triangles and double top, double bottom. So that's what I mainly teach under the market structure strategy here at Financial Hub. Those are the main patterns I'm looking at. But I did away with the head and shoulder and all that. So personally, I'm still watching this gold, seeing what pattern is going to form before I get an entry. But as I said, a very long term. I remember Ken on Monday, he was saying he's still bearish on it, waiting for I think 1700, 1750 to be touched. Personally, I'm just going with the way the market is showing me. As long as we remain above 1800, I'm very bullish on this one, especially due to this pattern that is forming. Okay, this pattern that formed according to my flag pattern rules. We already completed that wave pattern, and we're expecting market to move up. So let me not waste so much time there. Something else I'm watching is Dow Jones. So many people, I had someone yesterday in the office who didn't know what Dow Jones is. So Dow Jones is an index. An index basically is a basket of stocks that are kept in one aggregate, and they find a mean to it, and we trade them. So sort of like Dow Jones is the top 30 biggest companies in America, and we trade them as a whole. S&P 500 on the other hand is the biggest 500 companies in America which people trade. So when you're trading such indexes, sort of, let's say, the S&P 500, why many people watch it, why it's one of the main indexes to watch, is because it has the biggest companies, 500 of them. So if the index is moving up, it basically means the American economy is doing good. So that's why many people watch the S&P 500. Dow Jones, unlike the S&P 500, just has the top 30 companies, which is quite less. So you can't really rely on Dow Jones to show you how the American economy is doing, unlike unlike the S&P 500. So Dow Jones, what am I watching on this one? You can see this is the daily chart. There's still a lot of bullish plays still coming. As you can see, I'm watching how market is reacting to the all-time highs. Okay, so as usual, market structure. What's the structure that's forming? So all-time highs were here. This was around March, before we had that crazy drop due to Corona. And currently, as the year is coming to an end, you can see market retraced all the way back to this level, and sort of we're breaking into new highs. But the momentum is failing to come in. Okay, you can see this pattern. Momentum is failing to come in, better seen on the 4-hour chart. So you can see we have that wedge-like formation that I was talking about. So wedge-like pattern, we had a pattern like this a few weeks ago on oil. It really lasted for about 2.5 months before it broke. So that's the same thing that's happening over here. This we entered, when was this? This was in November, beginning of November. So about 2 months as well, market has been within this sideways movement, sort of like wedge-like pattern. So one of two things might happen. Okay, we might have that touch of this level and market to drop around back to 28,500 level in respect to this pattern. But the other thing, if you go to the daily chart, that can happen is that we can have a break to the upside. Okay, so this can be a full zone. Okay, this can be a full zone such that we're entering into new highs, the market momentum is reducing, we expect market to come back down. It can happen the opposite. We've entered into new highs, there's a lot of indecision, and then later on the institutional traders come in and push these markets to new highs. We've seen this happening on stocks, on indices. Market exuberance normally happens, and market normally goes to extreme highs. Tomorrow is a very important day, especially for the S&P 500. So if you've been watching, so this is just extra information I'm giving you. S&P 500, if you watch this one actually is at all-time highs as well. Why is it very important on the trading day? It might be one very volatile day because Tesla is being added to the S&P 500. Okay, Tesla currently has a market value or market cap of $600 billion. It's ranked the 9th biggest company in the world. Okay, so having such a huge company entering into an index such as S&P 500, of course we're going to have a crazy volatile day tomorrow. So not tomorrow, on Friday. Sorry about that, not tomorrow, on Friday. Friday is when we're going to see a lot of craziness happening. So I'm waiting for that market. The stock market is going to be really affected, especially S&P 500. So that's just extra information I thought to share with you. But going back to my Dow Jones, I'm expecting either of two things: either market comes and breaks down, or we can have that push to the upside and market to continue with the bullish momentum. Because in a bull market, there's a rule that says in a bull market the bear factors are often ignored. So market might just continue with the upward momentum. With that said, if I look at
I don't have much on USD card. I also say this on Monday. I still just like the dollar index market has been lower lows, lower highs, lower lows. I still expect this one to continue dropping. You can see this beautiful pattern that's forming, sort of like a channel-like formation. We had this first touch, second touch. I expect this market at least to come and bottom at this level, around the 1.25 level, which is about 230 pips from where we are. So long term, I still expect that one. 4-hour chart, I'm not really getting a good entry. Okay, market is just moving. We're not really getting those deep pullbacks which can give me a good risk reward, because that's what we're normally looking when we're taking trades. Proper risk reward and a good trade setup is what we're normally looking for, but I'm not really getting that on USD card, so I don't have a strong bias on that. So let me pass that for now. US oil, people who trade US oil, patterns that are forming. Daily chart. So daily chart, same thing. So as I said, market normally does this. We break into new highs. So this sort of just a sec. So yeah, so once we came to this level after bottoming all the way to zero, market came into this level. So this is where we had that almost 2 months wedge like pattern. Let me show you how it looked like. Just taking you back in history. So we had this sort of like wedge like pattern. It was very, very simple, very clear, lasted for a long time. So there we go. So this is what I was talking about. So for the person who's asking what patterns do I rely on, this is a wedge pattern. This is normally what we call an ending diagonal pattern or an ending wedge pattern. By that I mean, and that we teach all that in our courses here at Financial Hub. Basically, an ending wedge pattern means market was moving in an uptrend or a downtrend depending on the underlying trend, and then finished the move with a slowdown in momentum and entering this sort of like pattern, and that's why we got this correction. We attained our targets at this level. We attained our targets at this level, and you can see market has gone further up into new highs. So same thing now is happening currently over here. Sort of market has broken the previous high and sort of entered that formation again. 4-hour chart, what you can see is sort of like that pattern. Okay, so you can see the same pattern happening. So this is something you should watch. And I remember Ken covered on Monday, he was looking at a short bias on this one after this massive touch over here, but you can see getting that entry is quite difficult. At the same time, just like Bot was saying on Dow Jones, this might be a break of new resistance level and market might just continue moving up. Sometimes these wedge patterns don't happen precisely, and sometimes it's normally a trap, and market can just break to the upside and continue with the momentum. So be paying attention to that. That's what I have on oil. I don't trade this pair, but that's what many people are watching. GU, I don't have any bias on this one. I haven't. I won't lie to you. I don't have any bias on this one. So let me not force anything. And I think that's pretty much it. Those are the few pairs I'm watching. And I think I'll end it there today, and I'll answer a few questions on the chat room. At least to end the year, no much trades taken this month. I think I've taken about 3 trades this month. So not really forcing trades. And Frederick, I see you. I answered your question. What patterns do you consider reliable? I answered that. Mike, head and shoulder, or is it because every trader knows about it and it's easy to spot it? Nice to do trade US stocks. I don't really understand you if that's a question or a statement, but head and shoulder, as I said, I don't really rely on them. So I used to long time. I used to say, here's the right shoulder, I'm entering this. Nah, I stopped doing that with more experience in the market. I'm not saying it doesn't work. Maybe for me, it doesn't work. Fred, using the prediction and measurement tool on TradingView, how can I properly measure a good risk reward ratio? I find the figures on that tool a bit confusing. How best can I get a good risk reward ratio? So risk reward tool, let's go back to the charts. So I see time is almost up, so let me just do this quite quick. So for example, the risk reward tool, I want to look for, let's take Dow Jones as an example, or oil. Let's take oil because many people trade it. So let me show you how to use the risk reward tool. Okay, so if you want the risk reward tool, it's on this left corner. Okay, so if you go to the, I think it's the third, fourth, here we go. So these are the risk reward tools: long position, short position. So let's say on oil you were looking at a long position. Okay, let's say when it came down here, you had a long-term bias and you had a long position on it. So you come and take the long position. So long basically means we're going up. Maybe you came and entered after this pin bar. So you just come and click where you want to enter. Okay, so to use this risk reward tool, so basically if you want to know proper risk reward, when you put it, it gives you the ratio of 1. Okay, automatically. Let me expand my chart a bit. I think it's a bit too small. Okay, here we go. So when you put the risk reward tool, automatically it comes at a risk reward ratio of 1. Okay, so definitely you do not want to take a risk reward ratio of 1. That is too little. In the long term, you won't make any substantial profits. So when you enter that trade, you want to put your stop loss just below where this market pinned. Okay, so you just bring this tool over here, just bring it a bit up, just below there, and you can see the risk reward has changed. Okay, so just 2.7. Don't look at the other numbers. The other numbers are not as important. We're basically looking at the risk reward. So, and personally, remember, the risk reward tool is not what will determine where your stop loss will be. It's your analysis. So basically, what I'm saying below this level is because you want to put it below this where market spiked, so to actually act as a bottom. So you want to put it below such that if the market continues down, you'll come out of that trade once it hits that level. But up here, you want to be targeting, for example, maybe new highs. You want to be looking over risk reward of 1:2 to 1:3, depending on your analysis on that trade. So for example, this is what you could have done on this one. Maybe if I use I wanted to use Fibonacci, but I think that will confuse many people, because using a target, maybe a target could have been 50. Okay, so taking 50, you can see the risk reward on that one is 1:3.2. That's a very, very good trade, but never take a trade that has a risk reward of 1. Okay, risk reward of 1 is quite little. So I'm not sure if I've answered your question on that, but that's how you use the risk reward tool. The opposite happens when you're using the short position risk reward tool. Do you guys think the market's momentum has slowed down this last month of the year? Personally, I can say, yeah, momentum has sort of slowed down, but the trend has been continuing. Looking at the dollar, because dollar has been continuing to move down. It's just that it's not moving with crazy momentum. It depends also with the market you're trading. Look at gold, for example. Gold it fell all the way down to 1765. It's shot back up. Now it's at 18. Where's gold? 1855. So depending on the market you're trading, it's been, if you're a short-term trader, maybe the market has been very volatile for you. If you're a long-term trader, the market hasn't been very volatile, or the momentum hasn't been much. So it depends with what type of trader you are. Some people look at the 5 minutes chart. I never look at that. Maybe it's crazy down there. But on the daily chart, things have been gradual, slow, steady, moving in that direction. For example, like Aussie dollar has been moving up, but not with a lot of momentum. What else? USD CAD has been moving down, not with a lot of momentum. So in the long term, so because I'm normally looking at trend direction on the 4-hour and the daily chart, and momentum hasn't been that crazy. So depends on the pairs. But coming next year, I'm sure momentum will kick back in, especially once we have COVID stuff. Remember, Biden is entering presidency. A lot of things are going to happen. Brexit talks, what they have decided. So, because for example, look at GU, what GU has been doing. GU has been up, down. That pair is crazy. It's been up, down. So if you trade that pair, it's been quite crazy week for you, or the other GA pairs. I mean the GBP pairs. So I think that's good. Nice questions you've asked today. I hope I've answered them well. Some I didn't really understand, but yeah. I think someone asked, do you trade US stocks? Now, yeah, we do not trade US stocks. We just trade the indices for the USA, but not individual stocks. But we like looking at them. Like I remember last week we were looking at Uber. On Friday we looked at Uber shares. Was it Friday or Monday? One of the two. We looked at the Uber shares, how they had a market capitalization of $85 billion after their IPO. Market shot all the way to 165. I think that was the all-time highs, and the target was 80. So we're normally looking at such stuff, but we don't trade them individually. Maybe later on we'll go into them. So I think that's it from now. I don't take so much time. We have other things to get into. I hope you have a wonderful week and enjoy the market. So I see a thumbs up. Thanks, guys. Thanks for always being here, people. I appreciate it very much, and I look forward to seeing you guys on Friday. We might do the last Zoom session. For the YouTube, I think we'll be done today till next year, but on Friday we'll have that last Zoom session, finish the year off, and yeah, have a Merry Christmas and Happy New Year. So that's it from me, guys. I'll see you on Friday. Peace. So I see, thank you, Financial Hub. You're totally welcome. I'm sure next year we have bigger plans coming. You've seen this year we've launched the book, our courses, and the funding program. Next year, bigger and better things. And we always move forward, and I'm looking forward to helping as much as people as I can as we move forward, because we cannot grow this industry alone, but with us as a team. So yeah, that's it from me. Let me not talk much, and I'll see you guys on Friday.